Welcome to the Brainstorm episode 51. Today, we're talking Tesla and ARK's latest valuation blog for Tesla. We've got the whole autonomous technology and robotics team here today. So we've got Tasha, Keeney, and Daniel Maguire. Tasha, do you want to just take us right in and walk us through the blog at a high level? And then we'll let Nick, who's been reading Threads posts all day, ask some of the questions.
All right. So we just updated our Tesla price target. We pushed it out to 2029. And we also published our model as we do every year, so users can download it and play with their own assumptions. But high level, what's different about this versus our last publication? Well, autonomous driving already, we thought would drive the majority or over half of Tesla's value over the next 5 years. Now we think that's actually close to 90%. So ultimately, we think Tesla will launch a Robotaxi service. They have a number of vehicles in the fleet that are Robotaxi capable today. And this will totally change the business model. It changes from, mostly one-time sales of vehicles to a recurring revenue stream, which we think will have attractive margins. So we fine-tuned some of the economics that we think will accrue to Tesla for this platform. And then, we've also learned a ton over the past year on AI, FSD, and we've incorporated all those assumptions here. So that's really the biggest update.
So one of the things that maybe we can dive in here is the probability of, or percent of simulations indicating first year of Tesla's Robotaxi commercialization. And so right now we have it at 58% for 2025, 38% 2026, 4% 2027, and then it tails off dramatically. So high confidence in it launching in the next year or two. I know you just mentioned all of the AI developments. What is happening that is giving us so much confidence for autonomous?
Sure. Well, I mean, one change to think about is this is, again, we're pushing the model forward, and one additional year that they haven't launched Robotaxi is already behind us. So if you kind of look back over our previous publications, like it's the distribution over when we think they'll launch has shortened, but part of that is really, again, just like shifting the time scale. It's like, okay, well, now we have some time behind us now. So yes, the midpoint of our assumption is next year. The second most likely years in our model, as you pointed out, is the year after that. Daniel, why don't you walk us through like some of the what we think is happening with FSD, some of that confidence?
Yeah, sure. So as Sam mentioned, 58% in 2025. And if you just kind of step back and look at the progression that's occurred over the last year. So this year, or in 2023, Tesla released version 12.3, which is a move to a fully end-to-end AI model. So as Elon says, it's photons in, controls out. And a couple of months ago, coupling that is that Tesla is no longer compute constrained, which was a big limiting factor for progress of the model. And since that, we've seen accelerated updates. Most recently, version 12.4 has rolled out to select few users and has completely removed the steering wheel nag and now monitors using the in-cabin camera. Then also you had the Investor Day last week, Elon mentioning that every point improvement, so going from 12.4 to 0.5 and so on, you could get up to a 10x improvement in performance. And they are approaching removing all static object collisions. And interestingly, I thought from the Investor Day is that the bottleneck has now shifted from compute to more so model validation. So by that, we mean that the models are so performant that the Tesla professional drivers that they employ to go out on the roads and test the vehicles have to wait such a significant amount of time for an intervention because they're getting that good. And that kind of makes the models difficult to determine which is the most performant one. So I think when you couple all of that together and then put it aside with the large fleet or data advantage that Tesla has, and they are leveraging that in the model validation. So for years, I know Tesla have done shadow testing, which is where they run the model behind the user driving it, and they can compare that to how the model performs versus what the user does, and use that as a method of testing how performing the model is. But all in all, there's a kind of multiple factors at play, but kind of increasing confidence. And maybe if you zoom out at the industry too, last year you had Grous who were kind of aggressively expanding their cities they were operating in, and then unfortunately had the accident, I believe, in October, and now they're going back to physical testing with humans behind the wheel. Waymo is a leader in the commercial space. They're operating in 3 to 4 cities, showing impressive progress, but measured all the same, and still have a couple of hiccups. I know last week it was reported, I think they had to recall some vehicles after crashing into a pole. And then also you have some Chinese players like Baidu's Apollo Go. But yeah, one thing with these models or these approaches that are somewhat of a limiting factor when you zoom out at the industry as a whole is the issue of scalability. Aside from maybe a more expensive hardware set with LiDAR, radar, etc., scaling could be an issue in terms of their approach because a lot of them are geofenced. So all of that said, we're becoming increasing confidence in Tesla's ability to deploy a robotaxi network. They've dropped a number of Easter eggs in their recent announcements, the ride-hail renderings in the Q1 call, and then at the end of the shareholder meeting, a video sample of how it could operate. And yeah, that said, we're pretty excited for the Robotaxi announcement in August to see any more tidbits we can gather from that.
I want to lob in a segment here. Sam, you brought up threads. I just pulled threads up. I searched ARK. I want to read one of these and then have you combat it. It's made in jest, clearly, but I think you can riff off of it and explain the actual utility and how we think about the Robotaxi rollout. So I will do a dramatic reading. This is preferenced as ARK's investment thesis for robotaxis. Robotaxis will pay for themselves, so everyone will have one. And because everyone will be using their cars as robotaxis, they'll need to use robotaxis to get around, which will create more demand. So people will buy more. You'll be using your neighbor's robotaxi to go everywhere, and they will be using yours. As a result, you'll be paying for each other's car payments plus profits. This will allow all to retire off their robotaxis, paid for by each other. Econ 101.
Yeah, well, Nick, I think I saw you post that yesterday. Maybe I think to distill that question, Tasha, to you is we've spoken to people where it's like, okay, even if they launch, what are the unit economics on this? Because I think that gets to the heart of that jest and saying,
yes,
why is this a good business? And what are the key drivers there?
Yeah, well, I'd actually like to address one thing. So, Tesla's been focusing a lot on users signing their car up for the network. And I think that is important. And they want to incentivize people to do that because I think the way that they will launch is they already have a fleet of cars with drivers behind the wheel that they're using for validation. They'll likely add to that fleet. They can take Model 3s coming off of lease to seed the network in specific cities, basically get enough cars on the road so that you're not waiting forever to get a vehicle. On top of that, they want to incentivize Tesla owners to potentially sign their vehicles up. And you can imagine that this is, okay, they don't have enough cars in one particular city to launch it well, and they want to add some more. I don't think that long-term that is going to be the majority of robotaxis, these personally owned vehicles that are signed up for the network. I think it'll be important in the early years. I think long-term, it's going to be other companies that house and maintain the cars, and they likely won't be on Tesla's balance sheet. So I do think that is one important distinction, because I think often people think of it and they think, oh, well, that's like kind of complex, and, you have to sign your car up. Who's going to want to do that? I mean, we think that there will be economic benefit to doing so. Elon said that you could pay off your car with it. Basically, the way that you can imagine this working, we have a blog on this, is that when you're not using your car, which is, by the way, most of the time, people use their car less than 5% of the day. The rest of the time, it's just sitting there, and it's something that you already paid for or are leasing. So the other 95% of the day, imagine that, you tell the network when you're not using your vehicle, it drives out of your driveway or, your work parking lot, and picks people up. Tesla has said that customers that do this will get a hefty portion of the per mile fee. It's, we'll see exactly how the economics shake out. But the business model is charging people per mile for this ride. So if you drive 5% of the time, but the car gets over a 50% utilization rate, just theoretically, imagine like 45% of the day, it's collecting revenue for you, and it otherwise would have just been sitting there. It does seem like a great benefit for people that are willing to do that. And again, it becomes like a recurring revenue stream on something that was previously just a stranded asset. But again, that might not long-term be like the majority of what we see.
Do you think that initial incentivization will be for current owners? Because there's also, I guess, a consideration of who Tesla's customers have been, and it's been, higher income households that may view this as a potential burden relative to what it could spit off for them in the early days, as in, the risk of putting my car out there on the network, it gets dirty, whatever you come up with as a reason not to do this. How exactly do you think you can incentivize a user? Like, I have a car, I would have some hesitations of just, at least at the beginning, putting it out there until I saw how it would all unfold.
Yeah, well, so I'm going to tell you said it's mostly higher income households. I mean, the Model Car was the best-selling car, the Model Y was the best-selling car in the world last year. And actually, Daniel, maybe you could cut in. You've done a lot of analysis on the price. Like, what do Teslas look like compared to the average car?
Yeah, sure. So in terms of price, you mentioned the higher net worth individuals, but if you look at the cost declines over the last couple of years, they're becoming increasingly more affordable. As Tasha mentioned, the Model Y, best-selling vehicle in the world, and then also the Model 3. With the EV incentive in the US, and I know there are other EV incentives, it gets a pretty cost comparative relative to traditional gas cars. So I'm not necessarily sure whether I would agree on that. And even looking forward, in terms of the next gen platform that Tesla have spoken about a lot, there's rumored to be kind of a stripped down Model 3 or Model Y, roughly rumored to be at around a $27,000 price. And importantly with that, it significantly increases Tesla's addressable market, maybe upwards of 3x the amount of users that could potentially purchase a Tesla. And then with that gets into the lower income bracket who potentially would see this as an alternative passive source of income. Like Tasha mentioned, if your vehicle's sitting there only for 5% of the week, you use it only for 5% of the week, it's kind of a no-brainer to earn income from it, when otherwise it would just be sitting there.
And I think the other element is, right, with the camera in the car and user profiles, it's like there's high ability to rate both the passengers as well as the vehicle itself. And so it's like, you don't want to, if you trash it and get banned from using the cheapest, most widely available transportation network, that seems like a pretty big disincentive. But I do want to circle back because Tasha, you touched on the element of, right, fleet owned versus human aided, like Airbnb type model, and that ties into some of the unit economics. And then there's the utilization, which ties into the top line of the unit economics. So maybe can you just quickly clear that for us?
In short, I mean, the reason to do this is that you're getting paid for it. So, okay, your car, driving your personal car today in the US, it's cost you something like 70 cents to $1 to do so. But if the car has a higher utilization rate, and by the way, that's the average personal car. So actually, Tesla's going to be even lower than that because they're an electric vehicle. We know from Sam's work, they have a better operating cost per mile. So you up the utilization rate in the car, it's going over more miles. You're now spreading some fixed costs out over that mileage. Imagine the cost per mile to drive goes, 25 cents or below, is roughly around there. But, you're able to charge maybe Uber-like prices at first, or even if you're undercutting Uber, So Uber is 2 to 3. I've seen closer to $3 per mile lately. But imagine you're charging $1. You're making up the rest of that. A dollar minus say 20 cents per mile. So if the car travels, Elon has said something like 5 times the utilization rate of a personal car, that would be like 70,000 miles per year versus like under 15,000 miles per year to you as the user normally. You're taking that mileage, you're multiplying by the delta. So yeah, it could be a meaningful income stream for people that are able to do it.
All right, Nick.
Charging.
What
Charging.
what are your what
I
charging?
brought this up. I think I brought this up last time, and I think the response was they're developing like a snake charger, a robotic snake charger, but those haven't been rolled out. So do you think in the 8.8 presentation we get some development on the charging front, or are they just going to put charging attendants at these locations so that cars can come in and charge themselves?
Yeah, I mean, they have the supercharger network now. So you can imagine that they don't necessarily, at least to start the network, they don't have to build out infrastructure. Certainly longer term, it seems like maybe the way that a personal driver charges will be different than a fleet. So you could change that infrastructure, or the way that they choose to build it out incrementally now could look different.
Well, they need the
Yeah.
infrastructure to connect the actual charger to the car if there's no one there to do that for them.
Well, I'm actually
Optimus.
talking about just the charging piece itself, because that's important too, right? So I think, yeah, they could in the short term have attendants that charge the vehicles.
Yeah, I would just add they've also invested in some wireless charging companies. And you can say, one of the downsides of wireless charging has been efficiency. But if it is for autonomous and it's at scale, you might not be as worried about fast charging if it's during downtimes. Could be a fun test case for the Optimus team to try and tackle as well. And then exactly what Tasha said, where it's like, if you're going to start, just put a person there.
Okay.
Nick, are you bought in? What else?
Are you satisfied?
What else?
I need to see the 8.8 announcement because I think there are. I'm bought into the long-term vision. I believe that this is going to happen, just time-wise, and these little hurdles and bumps in the beginning may not seem like you can overcome them, but you still need to do that in the beginning and to roll it out, and then also to attract enough users directly to an app that gets more into the direct to consumer services business, which is a nightmare in and of itself. So there's a lot of things to consider more on the short term in how they roll it out, and that's why I'm very curious to hear how they approach it in August.
Yeah, I think it's not trivial. I mean, they already pioneered in the auto industry a direct to consumer model, right? In terms of sales versus going through the dealership. This is different than that. There's certainly components that they need to set up that aren't all there today. But I do feel like we're hearing incremental progress. Daniel mentioned like some of the app renderings, like the videos that they're showing. We also heard during the shareholder meeting them talking about how a remote operator network would work. So if the car messes up, how do humans, in a command center, intervene in those rare scenarios to help the car? So it sounds like they're putting more work into that back end. And essentially, the bet we're making is, while that back end is not nothing to set up, it is an easier problem to solve than getting the car to drive itself.
Yeah. Another question, and again, more short, call it maybe even medium term. I think about what Uber and Lyft did to the yellow cab industry in New York City, but then I fly into New York City and there's still plenty of yellow cabs. And, oftentimes what will happen is you go to Uber or Lyft at the airport and you say, 12 minutes, there's, a line for yellow cabs, and I think they've standardized it on like $50 to get into the city from LaGuardia, I think it was. And so I'm wondering if it, is so disruptive that all of the human ride hailing goes away, or it just gets a large portion of the market and part of it remains in
Well,
its current state.
Nick, they're still there, but the the value of a taxi medallion is
Oh, of course.
almost
Yeah, no,
nothing.
of
So
course,
it's
of
like,
course. No, there's value, and then
yeah,
there's
yeah, yeah.
utility of the underlying, and there's still a value ascribed to medallions, but it's not anywhere near its all-time high, but it still exists.
Mhm.
And that may, go away over time, but I'm just, what does that timeline look like in reality?
Yeah, I mean, I think we expect autonomous driving to be with integrated traffic, so with human-driven traffic when it first rolls out, and then longer term, people still ride horses, but so you see a lot fewer people doing that on the road today than you did when before the automobile. So I think that human driving will look like that eventually, not over the next 5 years, but sure, over decades to come, it'll just be rarer and rarer
Yeah.
and less safe ultimately.
Do you think there's also an element here of, I feel like the car industry or ownership of a car is a way to express yourself as an individual? And I'm just wondering, maybe this is more US centric, if, over time, are people actually willing to forego owning a car for robo-taxi usage? I just, there's a large part of the US that is like absurdly attached to their vehicle. Like you have the Jeep
Yeah.
Wave and Ford
Mhm.
trucks, and everyone is like, I'm a Ford, Chevy, or whatever it may be. Even Tesla, right? Like you're a Tesla, I'm a Tesla owner. Like it becomes a part of your individual brand identity. And maybe it just shifts. Like I use the Tesla network, or I mean, I guess that does happen today, right? People, I use Uber, and someone else is like, no, I use Lyft, and it's like you become very definitive in your usage. Maybe not as much on the services because people just look at price comparisons. But I think car ownership is very uniquely expressive in the US. Like people put rubber duckies on their Jeeps. It's so interesting to me.
Yeah, I love that question. It's like, because, yeah, if you go back, automobiles come out and then you have like highway access all of a sudden. And the idea of the automobile is freedom in the US. And it's like so meaningful. The thing is that, you know, culture, I think cultural attitudes, but even if you just look at that, the data has actually been changing over the past decade or two. So we see fewer people getting their licenses when they are of age than were previously getting them. And we're actually already seeing evidence of young people moving to urban areas and they don't need a car because they can just use Uber and Lyft. So I agree with you that it's like there is a subset of people that do that, but again, it's like, yeah, they're horse lovers too. I go back to that analogy, and maybe that's what it'll look like in 20 years.
Nick, expression will go to Optimus. How many Optimus robots you have? Put skins
Right.
on
And
them.
that's maybe we'll just touch on that quickly because, that's integrated into the model and it's replacing labor in Tesla, but doesn't have a material impact relative to autonomous over this time frame. And I would direct people to our big ideas. So we do think Optimus is going to be a huge opportunity, 24 plus trillion in annual revenue, and that's roughly split between at home and manufacturing. You could see it potentially in services as well. The real question here is the timeline for capability and generalizability. And so it is certainly a timeline question. Whereas I think in the investor day presentation as well, Elon said it, but it's like if you get to the end state where it is as capable as a human, it's very easy to see how it can be a multi-trillion dollar application.
Yeah, and we had a lot of internal debate over kind of how to tune the Optimus assumptions in the model, but you can see that we do expect. So we haven't assumed that they sell it externally. So you as the user, that's something that you could change as one of your inputs. Okay, well, if they sell it externally, kind of what would that look like? What would the revenue and margin profile on that look like? And then, you can look at sort of the volumes in the model as well, tune your own assumptions. But ultimately, relative to autonomy, but even just in the context of EVs, it has some impact on manufacturing costs in the 5-year time frame. But it's just doesn't have a big financial impact from our perspective over that time period. Of course, past that time period could certainly change. So
thank you, Tasha and Daniel, for spearheading the model and for joining us today.